Hi everybody, I'm Sergi Kilembi and thanks for joining me for the weekly US market report. Time to trade the markets, the week ahead, and perspectives and analysis. First, we're going to have a look at the economic calendar. Second, we're going to have a look at some news. Third spot, we're going to have a look at the S&P 500 sectors map. And fifth, we're going to look at some charts and do some technical analysis. Okay? Yeah, well, that's it. And that's for the trading week beginning on Monday, August the 20th, and until Friday, September the 1st of 2017. Okay, let's go. So here we go. First of all, let's have a look over here at the economic calendar. Okay, and what do we have on Monday? Nothing. On Tuesday, August the 29th, in Japan, we have unemployment rate for July. Next, in Germany, we have the GfK consumer confidence from September. And on Wednesday, August the 30th, in Switzerland, we have the KOF leading indicators for August. In the European Union, we have the business confidence from August. In Germany, we're going to have inflation rate year over year prelude of August. And back in the US, we're going to have the ADP employment change from August and GDP growth rate quarter over quarter, second estimation for the second quarter. And on Thursday, August the 31st, in Great Britain, we're going to have the GfK consumer confidence for August. Okay, so that's it for the economic calendar. So now let's move on and let's have a look at some news. We are here. We're only gonna concentrate and see some articles, just the headlines over here at www.businessinsider.com in finance. Okay, just to have a thought and just to see what's happening and what are the buzzwords in it for the week, to see if we have some catalyst. Okay, first here, a portfolio manager at Easy Englanders 35 billion hedge fund is setting off on her own. So they talk about hedge funds. Next, in what's happening, we talked to president of the Nasdaq Stock Exchange about IPOs, IEX, and how to revitalize the markets. So if you're interested in that particular article, you can read it on your own. And next, a fresh San Francisco hedge fund is aiming to raise as much as 600 million. Okay, over here, the new era of payment processing will change everything, and that's great because over here, we have focus on the financial sector and the credit industry and also the banking industry. So everything from Visa, MasterCard, PayPal, and you see the big banks, the money center banks as JP Morgan, Wells Fargo, Citigroup, and Bank of America. So that's going to be interesting. Okay. Next, let's move on. Traders are baiting from US stocks, so stock market over here. Next, precious metals may be ready to go parabolic. Oh, that's huge. Your gold and silver over here. Okay. Next, gold shines as Washington stumbles. One more time over here, gold. So we look at precious metals, gold and silver especially. Over here, what do we have? Corporate raider Bill Ackman threatened his most recent target with negative media coverage. Well, that's about media and politics, stuff like that. The 15 best business books of all time. No Hollywood over here. No, over here, what do we have? You can't understand the fintech revolution without these reports. So yeah, that can be pretty interesting. And over here, hedge funds can start betting on the stock market's secret weapon. Okay, one more time. Stock market, Nasdaq, Dow Jones Industrial Average, S&P 500, and your Russell. So that's it. Over here, 10 largest yachts in Monaco, well, whatever. Over here, A 2.4 billion hedge funds letter raises a fundamental question about the future of the industry. The hedge fund industry is being hit hard. You see, lately you see people like Paul to the Jones having investors pulling out money and stuff like that. Large hedge funds are losing money and stuff like that. So you see, the financial industry is being in turmoil, you see, lately. So let's consider that. Okay, over here, Alibaba, the explosive stock that's dividing Wall Street, and that's Alibaba. Okay, so watch out for Alibaba. Over here we have Jamie Dimon, CEO of JP Morgan Chase. Okay, let's see, deep divisions over here, deep divisions across our country. Here's the memo that just went out to JP Morgan staff. Next, over here, billionaire Kyle Icahn is reportedly in legal jeopardy for trying to influence Trump policy. Yeah, that's the same article as last week. So I think that we covered it all. Over here, former GE CEO Jeff Immelt says he will not become Uber's next CEO. So your company is Uber and GE. So maybe that can shake a little bit the market and shake the price action of those respective companies. Okay. Here, Trump's richest campaign donors are being left out. The stock markets surge. Okay, the Trump rally and stock markets. One more time. No, over here, what do we have? Goldman Sachs. There's a split in retail and only 2 types of store will survive. Oh, that's interesting. So have a look. Okay, next. These 17 US companies have the biggest piles of cash. Okay, so that's it. So that's your company with cash on hands and doing nothing. They have the cash overseas. Your companies like Apple, your Microsoft, your Googles, and your Cisco are the top 4. And you see that there's 13 most other 13 other companies also doing the same thing. Here, Goldman Sachs, he's out to make a killing in the market this September. Okay. What else? No, that's the same thing as last week. Okay. So now let's move on. Let's have a look at the stock market. Okay, over here, what do we have over here? That's the S&P 500 sectors map on the weekly performance. And you see everything, it's green, all the sectors. Except for over here in the catalog mailing industry, mail catalog order, you have Amazon, Walmart, Costco. In technology, bad week for Facebook. In services, bad week for Amazon, Walmart, Comcast, and here Priceline. Basic materials, all green. Healthcare, bad week for J&J and medical applications and healthcare plan. Industrial goods, bad week for GE, 3M, United Technologies, utilities in green. Consumer goods, bad week for the beverage industry. Processed foods also had a bad week. Textile, bad week, and green for Apple. And financial, everything in green except over here, that's in that particular industry, the property and casualty insurance, bad week for AIG and others. But Berkshire Hathaway is doing great. And also remember that lately in this September, we're going to have the release of the Apple iPhone 8. Okay, so now let's move on. Let's have a look at the ETFs, and you see everything over here. Stock market, everything is in green. The inverse in red, so that's great. All the sectors, everything is in green except here for your consumer staples. Let's have a look. That's your your consumer non-cyclical, your consumer staples. Consumer cyclicals is over there, and that's your consumer non-cyclicals. Consumer it's in red, but everything is green. So you already know that we had a bullish week. Your VIX in reds, over here international, everything in green. Global, over here the gold miners, everything in green except for dust and GDST. Fixed income, corporate debt in green. Your treasuries, everything over here, US government debt over here, everything in green. Strategy and commodities, everything in green. Expect over here for the USO, the crude oil ETF, you have your SLV over here, also in green, but everything looks green and great and perfect. So now let's move on, and now let's have a look at the charts. Let's do some charting over here. Okay, first let's start off with the Dow Jones Industrial Average, and we have a look. What are we witnessing over here? And you see that we have a inside week pattern. That's an inside week. You see that green, that red bearish candlestick, and followed by these green candlestick over here. That's a inside week candle. Okay, but we are between the 13-week moving average over here, and over here that's your 4 weeks moving average, and over here that's your 8 weeks moving average. So now if that's a bullish signal that the that region over here, your 21,655 points, that's our bottom. So next thing to expect the markets to do is to go higher. So here we go. So now maybe if we have a buy signal, for me that's gonna be a close above the 21,900 points over here, and a close above the 4 weeks moving average, and also to get out of the inside week candle. So that's gonna be being over here a close above 21,950 and closer to the 2,200, yeah, the 22,000 points over here. So that's it, closer, yeah, to the 22,000 points. So that's it. That's a great bullish signal, and from that we're gonna expect a some bullish candles, you see, to follow that particular one. But for the moment we remain in an inside week candle, so let's see what's gonna happen on Monday. Okay, so in conclusion, Dow Jones sideways movements, but if we see a bullish continuation, so it's time to buy, and you know that we are going back towards the 22K. Okay, next let's continue. Now let's focus on the NDX. That's your NASDAQ 100. And what's happening over here with the NASDAQ 100? Boom, let's zoom in. Okay, there you go. Exactly the same thing, you see? Sideways movement with huge spikes over here on both sides. You see max over here and the lowest, that's huge spikes. And if you notice over here, that's your inside week candle, but also take a look, we have a point of convergence here between the 4 week moving average, 4 weeks moving average, and your 8 weeks moving average. And over here that's your 13 week moving average. We're trying to reach and to interact with the 21 weeks moving average, but that failed, and we came back up, and that's it, a close at 58.22, and that's a inside week candle. And next, what are we expecting for next week? Same type of thing, but you know, if the market cannot close above 58.38, 58.40, so we're gonna remain in that particular range, and we can see more downside. Okay, so that's it. So I'm expecting sideways movements for next week. Next, let's move on. We already seen what's happening in the S&P 500 sectors map. Now let's have a look at the technical analysis on the charts. So let's pull the charts over here. That's it. That's the S&P 500 weekly charts. Okay, let's zoom in. And so let's have a look at the price action over here. We already know where are our key points and our key resistance over here at 24.80. That's your key resistance. Max high at 24.90, and over here that's your supports over here. Key level, critical level over here. We're trying to interact with that particular level. You see over here, that's your 21-week moving average. And over here, that's your 26 weeks moving average. So the region is 24.20 for the bottom. You see, same thing. We already connect with that particular bottom over here. You see, that's your 4 weeks moving average, 8 weeks moving average, and in red, that's your 13 weeks moving average. And over here, we have huge convergence between, first of all, the 4 weeks moving average and your 13 weeks and your 8 weeks moving average. Now we have the 4 weeks moving average going below your 8 weeks moving average, and now I'm trying to connect another point of convergence between the 4 weeks moving average and your 13-week moving average. And so now if the 4 weeks moving average crosses below your 13 weeks moving average, it's gonna go down. You see, down like that, boom, and to go maybe trying to interact with that particular support over here at 24.20. So what I'm expecting, but have a look at one thing, that's it. You see that particular bearish candle over here? You see that I have the golden line at 24.40. That's your 50% of that particular bearish candle. So now we have a close above that particular 50% level of your bearish candle, but we are still under the 13-week moving average over here. We are still below 24.45. We're trying to go higher, but we rejected higher prices, and we came back and closed at 24.43. So what I'm expecting next week is market to open at that particular region, trying to interact. But if we fail to see higher prices around 24.50 and even higher, to be out of the inside week pattern, we're going to remain in sideways movement, and therefore we can see more power and more bearish powers and more bearish sentiment and more bearish moves. So expect the markets to be volatile in intraday, or someday we can have a huge spike between let's say Tuesday and Thursday, and maybe on Friday things are all gonna come back to a more stable type of trading, and then close the week in, I think that the week is gonna remain flat. We're gonna have sideways movements. For my part, that's what I'm seeing, but I'm ready to take action. Okay, so that's it for the S&P 500. And now let's move on and let's have a look at the VIX, the volatility index. VIX, yeah, that's your VIX, CBOE volatility index. And we'll take a look at that. See, huge bearish candle, but remember what I told you 2 weeks ago, we are still in an inside week type of candle. You see over here, we are here. We're going nowhere. We are here. That's huge bullish candle. Take a look. Next candle, inside week. That's your top and that's your bottom. And that particular bearish week, that's your top, that's your bottom. Between the range of fluctuation of that great bullish candle. And also remember and also pay attention to this. You see over here we have at the 15 point mark, what do we have? We have your 104 moving average followed by your 208 moving average, and those two particular moving averages are acting as resistance. And over here it's closer to the 50% mark of that particular bearish candle. What do we have? We have our 4 weeks moving average just below that particular moving average, below your 4 weeks moving average. What do we have? We have our 52 weeks moving average, and over there at the bottom acting as a support, what do we have? We have first of all the 21 weeks moving average. Next we have your 26 weeks moving average. Next we have your 8 weeks moving average, and finally we have our 13 weeks moving average acting as a support. So that's it. All the moving averages are moving sideways in horizontal, so they don't have any direction. So that means sideways movement. But you see the spreads between 15 points and over here 11 points acting as your support over here. That's a 4-point spread. And for the VIX, that means volatility. So as I said earlier, we can see a lot of volatility intra-week, so to speak. Okay, so between all the trading weeks from Monday till Friday, you're gonna have huge fluctuations, and that's your volatility just between that particular range. So you can see, remember what I said earlier, so we can see inside another inside week type of pattern, and maybe in around the second week of trading of the next month, the month of September, then we're gonna see some movement and some direction. Maybe a market trying to go back, especially for the Dow Industrial going back towards the 22K, or otherwise we can see sideways movement and even more moves towards the downside. Okay, so that's it for your VIX. Now let's have a quick look at the XIV. Okay, that's it, that's your XIV. And over here, okay, let's zoom in. Okay, you see, I was expecting 2 weeks ago, I was expecting more moves towards the downside, because take a look at the huge sell-off over here. What do we have? You have your resistance at 96 points, and over here, take a look, that's your 73 points or dollars, excuse me. And take a look now, we have 1-2 weeks of inside week candles, and take a look at your here in red, that's your 13 weeks moving average at 84 points, and that's exactly the 50% zone and mark of that great bearish candle. So what it means that you see now we have a close right spot on the 4 weeks moving average. Next, what are we expecting? Let me show you. Just wait a second, please. Okay, you see this one. Now what I'm expecting is a continuation. If we do have a continuation of that particular bearish bullish movement, we can go back towards the 96 points or dollars region over here. Excuse me. No, I need this one over here. Yes. Okay, that's it. So you see, okay, like that. See over here, so if you have a continuation, boom, we can go higher, you see. But next week we need to close above 84 and 85, 84 or 85 points for the XIV, and then have a continuation. So maybe that's our bottom, and now we can go higher. But remember to pay attention and to be cautious, because what do we have over here? We still have that particular gap over here, you see. So that was the reason why I was expecting more moves toward the downside for that particular move, and the market, the XIV, to reach 62 50, the region of the 52 weeks moving average, to fill the gap, and then from here bounce from here, boom, like that. See, bounce from here and then boom, going back higher. But the market did its move, and that's it. Okay, so we trade what we see. Okay, basically that's it. Okay, so now let's move on, and now let's have a look at the small caps, and that's your Russell 2000, US 2000. Oh, one more zero. Okay, US small cap. And let's have a look over here what happened with the with your small caps. And what do we have? We have exactly the same thing, you see, as the other indices. And here with the Russell index, another inside week type of candle, type of pattern. But take a look over here. Over here, what is this? This is your 52 weeks moving average. So we in great interaction with that particular moving average. And over here, that's your 4 weeks moving average. And take a look also over here, your convergence. Now your 4 weeks moving average crosses below all the other superior moving averages. Over here, your 26, 21 weeks moving average. Yeah, that's your 8 weeks and 13 weeks. And also notice that your 8 weeks moving average crosses below your 13 weeks moving average, and now it's chasing after your 4 weeks moving average. So that's pretty bearish over here. So what can we see? Maybe we can see an A, B, C, and then a D. The market can go much lower, or the market, as you already seen in these historical movements. You see over here, the price action, the market find a bottom at that particular level. You see over here, it bottomed here one time. Second time, you see a huge range like range like 1, 2, 3, 4, 5, 6, 7, or close to 2 months. You see of sideways movements, then gap up and boom, starting to go higher, max high, and then boom, 1 month of sell-off. You see 4 weeks in a row to the downside, and here maybe that's our bottom, and your 52 weeks moving average over here is acting as a support. So if we found if that's our support, so we're gonna see a consolidation over here. What it means, that means sideways movements and then accumulation, and then maybe we can start to see some bullish movements. Okay, but for the moment, for me, that's sideways movements. Okay, what do we need? We need a close above your 4 weeks moving average, and then a close above over here 1400, and then at 1410. Okay, so that's it. Now let's move on. That's your Russell. So now let's have a look at the treasuries. First of all, we're going to start with the T-notes, 10-year treasury notes. Yeah, that's TY. Okay, here we are. Okay, that's it. So exactly the same thing. You see, flat week, but I think that, yeah, that's already the new week, yeah, because me here in Europe, yeah, that we already in more on Monday. Over here, that's 12:30. Yeah, 30 minutes past midnight. So I'm already on Monday. So you guys over there in the US, when you're gonna see that particular video, it's gonna be, yeah, the markets over here, and you see the futures markets and stuff like that. Your commodities, your FX are already running and trading. So pay attention to that. So you see over here, last week was a bullish week, but small doji. You see, going nowhere, no movements. We are stuck between the 208 weeks moving average over here. That's your 4 weeks moving average over here. You see over here huge convergence between your 8 weeks moving average, 52 weeks moving average in pink. In red you have your 13 weeks moving average. Here in blue that's your 21 weeks moving average, and in black over here that's your 26 weeks moving average. So now we need to go higher, but when I see that gap down over here, if the stock market bounce back up, we're gonna see money starting to go out from the treasuries and going back towards the stock market to push it higher. So theoretically that's it. Okay, but for the moment, yeah, market it's open and we are going down. The beginning of the week for the treasury notes, for the 10-year treasury notes, is bearish. Okay, so now let's move on. Oh yeah, remember, the higher the price, the lower the yield. So now if I'm seeing the price of the bonds, of the notes, excuse me, treasury notes going down, that means that the interest rates, the yield is trading higher. Okay, so remember, they're inverted. That's an inverted relationship. You see one going up, the other one is going down. The price is going up, the interest rate is going down. Okay, remember that. Now let's have a look at the 30 years. Oh, excuse me, that's putting things in Spanish. 30-year. Yes. The 30 years bond, you know that the yield, I need this one. Okay, perfect. We see exactly the same thing, and over here we can see a huge gap down. See, from the close over here at 156, boom, gap down, and opening at 155. That's a $1 drop. Okay, so that's huge, and we are back between the 4 weeks moving average and 52 weeks moving average over here. See all the moving averages over here acting as a support. So that's good, because that's all the moving averages are below the candlesticks, so that's a bullish signal. Okay, but you see that particular movement is dangerous, so be cautious. You see, so what does it mean? That means that maybe we can see, if it continues to go lower and the price, the fluctuations and the price of the T-bonds is going lower to interact with all these moving averages, that means that we're going to see the stock market going higher. Okay, so remember over here, if the bond price is going lower, the interest rate is going higher. Okay, so that's it. So now let's move on and let's go to the Dixie, the US dollar index. Okay, US dollar index over here. Whoa, 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 whoa. What is this? You're seeing that? I think that you're seeing the same thing as me. Technically, wow, people, that's crazy over here. I don't know if that's a blip, or I don't know what's happening over here with the charts, but if you're seeing the same thing as me, you're seeing technically the dollar starting to trading at 10 points over here, 9, and boom, came back up. I don't know, maybe that's a problem with the software or something like that. Let me switch to the daily charts and see what's happening. Whoa, because that's wow. But no, wait a second. I'm gonna see what's happening, and no, Wow, that's a huge gap down. And what do we see? But I don't know, people. That's live, and you see that the dollar. Yeah, that's for today because yeah, here we are past midnight, and yeah, that's 12. We now it's 12:34, and yes, what you see the same thing as me. The dollar was crashing. That's a huge blip, huge flash crash. You see over here, that's zero. And take a look. Wow. So over here, I don't know what to say, but we're gonna have a look at that lately. So you know what? We're gonna have a look over here. Over here, that's your forex. We are at trading economics, and to see the performance, you see all the currencies. You already see that now all the currencies, all the markets are open. The foreign exchange market is now open. You see number one best performing currency, that's your Bitcoin. You see over here yearly performance 660%, monthly performance 75%, close to 75%, weekly performance 7%, and today just down a 0.01%. So that's nothing, and price at $43.86. And your Dixie said, yeah, now, yeah, let's have a look over here. Let's pull up the charts on another platform to see if that wasn't a problem only on the charts of investing. And let's see what's happening here. So you see here, that's normal here. The charts only shows me this. You see no crash in here, just markets continuing to going down. So that's it for your dollar. The dollar is continuing to go down, and now we are exactly, let me pull over here the weekly chart. Yeah, and now over here you see your pointers over here, that region over here, that was our support at 93, and now we are trading below 93. So that's it. Now I think that we can call it a bear market for the US dollar, and things are accelerating. If you can see my chart over here, I have this red line over here. That red line, that's a long term, a very long term trend line, and we broke below that particular trend line. Well, here in these charts, but wow, I don't know. But over here you see, yeah, over here your trend line, that you see the that's moving average here in green. That one, that's your 208 weeks moving average. And if we trade below that particular moving average, the dollar is in free fall. You see, we do not have any more support, only the pivot point region over here with a first support at 86. So that's it, 86, and next 84. Okay, that's that particular region. So if we are in free fall, if we continue to go lower, that means that boom, we can go and reach, you see that particular trend line over here pointing at 88. So first if we reach 88 and then next 84, so that's critical. So there you can say that yes, the dollar is in free fall, and the dollar is in relation to other currencies is going it's in a bear market. Okay, so that's it. Okay, so that's it for the US dollar. And now we are having a look at commodities. First of all, let's begin with the crude oil, your WTI futures. Wow, the thing, yeah, with the dollar was wow, wasn't expecting to see something like that. You see sometimes stuff can happen, but you see in one platform what they showed us, and another platform things seem to be normal, so I don't know. Okay, so that's it. Your crude oil inside weak candle, still going nowhere, and as you can see the pattern over here, you see boom, resistance, support, resistance, support, resistance, support, resistance, break outside of the resistance, but now we're trying to go back in, and as you can see, that's lower lows and higher lows. Okay, but maybe now that's a B, C, D, and we are going back higher. So now that's the bottom, same bottom as here. And maybe now we are going to do the inverted. So what's going to be? That's going to be, you see, low highs. See, lower highs and higher highs. Okay, so that's it. And also we're starting to see a formation of a head and shoulders formation over here. See, shoulder, head, and maybe another, excuse me, maybe over here we see another shoulder. So that's your first shoulder over here, your head, and now here formation for your second shoulder. Boom, that was like that, and then we're witnessing a power moves towards the upside. And also take a look at all the moving averages are going horizontal, so we can see sideways movements for a couple of days or maybe weeks, and then we need direction. We do not have a direction. All I can say is that based on the price action, we are rejecting lower prices. You see over here, rejection of the prices below your 21 weeks, 8 weeks, and 13 weeks moving average over here, and over here above we have your 26 weeks, your 4 weeks, and your 52 weeks. So the price is stuck between those particular moving averages, so we need a direction as quick as possible, if it's possible also. So it depends on the trading god. Okay, so now let's move on. Let's have a look at precious metals. You see a lot of talks. You see a lot of article earlier when we saw the news talking about gold. You see gold over here fails to cross above and to close above $1,300 an ounce. But now you see we remain above the, see that's that particular bullish candle over here. 50%, we remain above. That's your 4 weeks moving average. Now the market is open. That's a sign of rejection, but we don't know yet. So we're gonna wait and see. What we need now, we need gold to go much higher and to close above $13.05. Okay, because it's been rejected once, twice, and many times. So that's a multiple top that we are seeing here. So we need gold to go much higher, okay, in order for us to place trades and to know that we are going higher. But in the meanwhile, what can we do? We can continue to stack our physical gold. Okay, so that's it. Gold, I'm expecting to see more moves towards the upside, so pay attention what the bonds is gonna do. If money starting to come out of the bonds and going back towards the stock market, but maybe you can see stocks in Dow, S&P, Nasdaq going higher, and maybe you can see prices of gold starting to pull back. But I see, but now I'm very confident and that gold's gonna be above $1,300 an ounce. Okay, so that's it for gold. So watch and see, wait and see, and watch and see also. Okay, so now let's have a look at silver over here, silver futures. So now exactly the same thing. You see the downtrend channel over here, marked by the dotted red lines, red parallel channels. So see parallel trending lines trending lower in a downtrend channel. Over here, that's your break of the downtrend channel's resistance. We are above, we're trying to retest that. You see all your moving averages being horizontal, going sideways. But now, what are we expecting? I'm expecting to see the silver prices going much higher. You see over here, that's your 4 weeks moving average, and we are right on that particular moving average and acting as resistance. You have your 26-week moving average in black. Over here, that's your 52 weeks moving average, and in green, that's your 208 moving average acting as support. You have your 52 weeks moving average, your 21 weeks moving average, your 13 weeks moving average in red, and in blue, that's your 8 weeks moving average. So you see that the 8 weeks moving average in blue, and the other blue, the lighter one, your 4 weeks moving average, they have direction. They are in 45 degrees, and that means bullish. Okay, but now we need a close above 1725. Okay, better said, above 1740. You see, and then to come back here to retest that particular resistance. You see, spot and right on, that's the region of your 208 moving average at 1766, and then you can see higher prices. I was expecting that back there here with that strong engulfing bullish candle, but it failed. But now I'm expecting that that's the right time for precious metals, as we see earlier. Remember, in those articles at Business Insiders, we see gold, everybody talking about gold. Gold can go parabolic, so yeah, gold and silver, precious metals. So I hope that that's a right moment, but the market and the charts and the price will tell us. Okay, so be ready to trade that, accordingly. Okay, now let's move on to the crypto space. Quickly, we're gonna have a look at Bitcoin, Ethereum, and Litecoin, and then we're gonna wrap up, and that's it. So first of all, let's begin with your BTC USD. Wait a second, because I know I have my charts presets with GDEX. Okay, Bitcoin. Okay, that's it. I got it. Okay, perfect. So over here, you see the pattern. You see the A, the B, the C, the D reaches 4,000 points. So that's it. And now we are here. We have that particular pointer pointing at 44.95. So that's your 4,500. So we're right back at it. And you see type of sideways movements, but we're going, you see, slower. But I think that it's going to be good for the Bitcoin to correct itself a little bit, you see, because we didn't have a massive interaction with critical and very, very important moving averages. That's your 4 weeks moving average, your 8 weeks moving average, and your 13 weeks moving average. Take a look, 1, 2, 3, 4 weeks away from that particular moving average, and that's too much. You see, we need to pull back a little bit. So it's going to be great, because that rise in that particular crypto is it's too quick, too fast, you see. So need to be very, very cautious. I'm going to start buying. Full disclosure, I'm out of I just left an insignificant amount of Bitcoin in my Bitcoin wallet. Now I'm doing what I'm doing. It's trading on derivatives of Bitcoin. We over here in Europe, we have CFDs. You see that CFDs, that's derivatives. Those are OTC products, and that's just a contract between us and the passing by an intermediary, an online brokerage account, and directly we trade those contracts with banks, with investment banks. In my case, that's with Barclays and other investment banks. So that's it. So we have access to CFDs. If you want to know quickly, I'm gonna tell you what is it. Imagine, but now let's say that the price of Bitcoin is 4,500. Okay, so now with the CFDs allowed me to trade on margin. So I only have to deposit 10% of the actual price. So Here you have the price at 4,500. Me, I just have to have on margin in my account 10% of the Bitcoin price. So that's $450. So if I have that, I can have access to one Bitcoin and trade it. And we're gonna be let's say trading just on the difference, on the price fluctuations. If I'm buying the Bitcoin and Bitcoin, let's say, move from 4,500 to 4,600, so that's $100 gain. So that's for me, and I'm paying the commission and interest because that's the bank is lending me money, so I have a small interest to pay. That's called a swap every night. So if I take overnight risk, so every night I have a rollover at 11 p.m. and boom, I have to pay the swap. So that's it. Okay, so for me that's more simple, and I can speculate on Bitcoin prices. You see, I don't have to have my wallet, going to the exchange and then transferring my Bitcoin to my wallet and then taking my profit. No. Me, I'm doing it right there in my online brokerage account, and also I can diversify it. Imagine I have $1,000 in my account. I can have $450 in one Bitcoin, and also I can have other things. You see, I can buy Bitcoin and short the Dixie, for example, and also I can do the Bitcoin Euro, buy the Bitcoin and short the Euro, do whatever types of things I like. Or I can buy Bitcoin, buy gold, buy silver and stuff like that with leverage. So that's it. That's a great way to trade and to speculate, but you have to have that financial education and know what you're doing, because you can quickly blow your account. You see, some brokers houses over here offered clients a 500 to 1 with CFDs. But remember, CFDs are not what you see over there. You see a lot of marketing, people pushing binary options. So no, CFDs, these are no binary options. Binary options are also OTC products, but CFDs is other types. There's a lot of derivatives, so you know. So here in mainland Europe, people are more trading derivatives, those types of derivatives, the CFDs, than the actual Bitcoin. So that's what I'm doing. Okay, so now you know. Okay, let's go back here to price action. But now me, what I'm seeing, volatility. That's it. You see, the opening now, and now what I'm seeing. You see that particular shadow over here. It's sending us a message that it's trying to connect and to interact with moving averages. First of all, over here, that goal was reached by the interaction with the 4 weeks moving average. But take a look, what do we have over here? That's your 8 weeks moving average, and if you calculate the spread, that's a 4,200, and that's a 3,400. So that's 800 points of volatility. So that's huge. So pay attention to what we're doing. So me, I'm just looking for signals. If I have a buy signal, boom, I'm gonna go. But if I see Bitcoin below 4,200, I'm gonna short Bitcoin, and my first target's gonna be 3,600. And why not? And if I can push, I see the price pushing lower, going lower, so I'm gonna try to take and maximize profits until it reaches the 3,400 mark. Okay, so that's it for your Bitcoin uncertainty moving sideways, and I'm expecting a direction, and hopefully I can anticipate that soon enough to enter the trade and profit from that. Okay, from those movements, whether it be to the upside or to the downside. Okay, next, let's move on. Ethereum, ETH, USD, Ethereum, and also GDAX over here. So that's it. Okay, so now, you see huge movement for the Ethereum. One month, one bearish month, the month of since mid-July, and over here in August. Great month for the Ethereum, going back towards the 375 and those 400 points. So Ethereum remains strong. That's bullish. See, now we are seeing continuation. You see the interaction over here with the 4 weeks moving average. Now where are we? We are here opening, and now that's, for me, that's bullish. You see, there's nothing more to say over here. Bullish. Yeah, if you want more, but first target, the psychological target, that's your obviously that's your 400 points, but the other one that's hit, that's your 375 target, and next 400 and next 420. Okay, so Ethereum going back towards the $400. Let's move on. In the final one, I was watching this one, and this one is Litecoin to put a trade, but oof, you see those cryptos, they move fast, so you have to be faster in order to catch those movements. And just take a look, bam, that's it, here we go. Yesterday I was watching and the price was around 52, 53, and take a look now, boom. And that's your yeah, that's the opening week, and that's it, because that's last week. And today here, Monday, August the 28th, and take a look. We're gonna put that in daily charts and take a look. That's it, that's your movement. You see a $10 move, and I missed that move because the market, they're going too quick, they're moving so quickly. I was expecting you see over here, you have, what do we have? We have inside day candles, and I was expecting the price to pull back a little bit, but moves too quickly, so fast, and that's it. I was expecting a move, but not that soon, later this week, and it came that it says to me, you're late, boy. So you see, you always need to be watching those things are fast, man. Okay, so that's it. So now let's calculate just like that. Let's see what is the potential. If now I'm coming here, the potential, that's 68. Yeah, I'm calculating that 68 can be that's, we have a potential to reach 68. Okay, so that's it. Okay, so thanks for hanging with me, and hopefully, and I know that hopefully my analysis and my perspective, my humble opinion, can help someone out there. And I see you next week. So have a great trading week, make money, take profits, manage that risk, and I see you next time. Okay, have a great week. Bye bye.